Hi there, Casey Dillman here with the TaxSaleAcademy.com, and in this video we're talking about the pros and the cons of buying commercial property at tax sales. Now in past videos I've talked about the pros and cons of buying houses, vacant land, and condominiums at tax sales. So if you haven't checked those videos yet, consider finding those videos and watch them because there's some awesome videos. But again, this video is all about that commercial property. First off, what is commercial property? Well, there's 6 different types of commercial property. The first one is going to be office property. We're talking like a bank, for instance. The second one is industrial properties. Consider where maybe a Ford warehouse is, where they manufacture vehicles. The third one is your retail properties. Say a Best Buy or Radio Shack. The fourth one is your commercial land. And the fifth one is the miscellaneous stuff. We could be talking like a self-storage building or a marina, for instance. Just kind of the miscellaneous stuff that doesn't fit any other categories. So let's talk about some of the advantages of buying commercial properties at tax sales. The first one is the obvious one, and it kind of applies to just about every sector of tax sale investing, and that is that there is a lot of equity. You'll be able to buy these properties at deep, deep discounts. It'll put basically a lot of cash in your pocket if you purchase them right. The second one is there is less competition. Now, if you're to buy commercial property on the open market, you are competing with a lot of different people. If you're to buy anything at a tax sale, you're obviously taking that audience and narrowing it lower and lower, getting less and less potential buyers. So what happens here is that by investing in the tax sale niche, you have only people that know about this tax sale niche. And to take it a step farther, when you have commercial properties at tax sales, a lot of the tax sale investors are only going to stick to the residential stuff. They don't want to mess with the commercial stuff just because they don't know a whole lot about it. So your audience is even smaller. So there's not a whole lot of competition for the commercial properties at tax sales. And the third benefit that we're going to talk about is that you have the flexibility to be creative. Now, if you purchase a retail building, for instance, on the open market, you're going to be stuck with that lease. You're going to be stuck with a lot of things about the property that you don't have a whole lot of choice about. But if you're to buy retail properties, for instance, at a tax sale auction, most of the time, those properties are going to be vacant. That way you can, possibly make some improvements on the building, increase those rental rates, and maybe get somebody in there for a long-term lease. So you do have a lot of flexibility when it comes to commercial property compared to buying that same commercial property on the open market where you're basically stuck living somebody else's dream for that property. Now, obviously, there's a few cons here. Let's talk about the first one. And again, this one kind of goes with a lot of the tax sale properties, and that is that there is typically no inspection. It is possible that you are buying a lot of hidden problems. A beautiful warehouse that's on the outside might have nothing but a bunch of 50-gallon drums of oil on the inside that have leaked all over the floor, so you have contaminated soil. There's all sorts of situations. So you are dealing with some hidden problems potentially. The second disadvantage is that it could come with large tax bills. Let's face it, commercial property has a huge impact on the infrastructure, has a huge impact on the soil, the economy, the environment, all sorts of things. So with that, commercial property usually has higher tax bills compared to residential property. So when you buy a piece of property, you of course get a tax bill with it, and this tax bill could be large. And the third disadvantage here is that it might be an undertaking that you aren't quite ready for. If you buy, say something small like a house, that's just one thing that you have to worry about. It's just one, minor issues here and there, and a lot of beginning investors can take care of this stuff. But when it comes to a commercial structure, not only do you have to build a property or to renovate a piece of property or maintain it at the very least up to county and city standards, you also have to ready that piece of property to have a occupant in it, to get a CO, and it has to be held at a higher standard. So there's a lot more expenses that go along with maintaining commercial properties compared to residential properties. So there you have it, the pros and the cons of buying commercial properties at tax sales. I really hope you've enjoyed this video. If you'd like to see similar videos, head on over to my website at TheTaxSaleAcademy.com, which you can do by clicking the blue link right here next to my head. Again, it'll take you to TheTaxSaleAcademy.com, and once you get there, download your free copy of my ebook, The Tax Sale Investing Blueprint, and you'll be on your way to a very successful tax sale investing career. Have a wonderful day, folks. Bye-bye.